Well, what's going on, guys? Welcome back to Let It Grow Investing. I'm Jeff. We're going to talk about all things stocks, get caught up on the market, what's going on to wrap up November, where I was last week, the things that I did, things I saw, and a couple different things about kind of holiday travel and all that fun stuff. So thank you guys for being here. Before I forget, please make sure you like, subscribe, and share. It definitely does help the podcast. I've got different links to help get you started, whether it's crypto.com or Webull or E-Trade, Binance. They're all in the description down there. So please go ahead and follow along and support any which way you can. Definitely appreciate it. And happy Thanksgiving to all that celebrate. It is November 30th. We are winding down the month. We did close the month positive, so that is awesome. I was not here last week. I was actually, probably hiking in Sedona about the time that this came out, or normally would have came out on a Monday morning. And family stuff came first, so that's where I was. But we spent 5 days out in Arizona. We did the Grand Canyon. We went to Sedona. We saw Scottsdale and Phoenix. And it was really nice out there. They had more rain in the time that we were there and like the week before than they normally get in a year. I believe they got like 7.5 inches in November, and I think their average for the year is like 7 or 7.2. So more rain, and was cooler than I expected. We had to get more layers at the Grand Canyon because the high was like 44 degrees and the wind, it probably felt like 30. We were not fully prepared. And, looking at the weather in Phoenix does not tell you what the weather is going to do in the Grand Canyon about 3.5 hours away. Rented a car, used Turo, first time using Turo. So that went well. Easier process than going through the checkout line or the counter at the rental cars. Saw all sorts of Waymo vehicles in Phoenix, right? I mean, they are everywhere. And I had to do a little bit of digging as to why I haven't seen them anywhere else. Google owns Waymo. Waymo is autonomous, self-driving cab service, essentially, right? They have a Waymo app. You can go on there and get a ride. So I looked it up. They are currently only in LA, San Francisco, and Phoenix, but they are adding 5 new cities. And those 5 cities, we've got Miami, Dallas, Houston, San Antonio, and Orlando. So the fact that you're using the Jaguar EV, like small SUV crossover type vehicle, probably all lends itself better to a warmer climate. I'm guessing if they put them in, Chicago or Minnesota or Detroit, cold weather would be a detriment to those batteries. So I'm guessing they're starting in the South where they can run those more efficiently and effectively year round. I'm not sure. That's just my 2 cents as to why they're kind of building it out that way. But that's definitely what they are doing right now. They've got 3 cities. They're adding 5. They are absolutely everywhere down there. So that is something we certainly saw. Travel was not difficult. Travel getting there, right before Thanksgiving, flying United was not crazy. TSA lines were not bad. The airports didn't seem crowded. I don't know. I mean, you kind of get all these reports from, NBC, ABC, whatever, big media outlets saying, brace yourself for holiday travel, but it wasn't that bad at all. We literally had no line at TSA leaving on Tuesday to come back home. Use the crypto.com card to get priority or lounge access. So we killed some time there. We thought we were going to be in line for a lot longer. So we got there early, had no line. So then I had lounge access through the crypto.com card. I got the Emerald card or whatever, and that gives you a certain amount of passes to airport lounges throughout the year. So if you're looking to, get started with that, I mean, I got my link in the description. But yeah, you've got to stake a certain amount of CRO coin, and then you can apply for the credit card, which actually is a debit card. But I've done that. I've been getting free different benefits here and there, Netflix, Spotify, and I guess you get lounge access, which is kind of cool. Not that I fly a whole ton, but when you do, it's kind of nice to be able to go in there and get a little bit of a perk for just basically holding the card. So so that was good. Let's get back to the market. I actually did sell 100 shares of Google. And that happened on Friday, right? I had that covered call. I'm sure I told you guys about it. It was written at 305. My cost basis on Google was a lot cheaper, probably in the 120s or 130s. And let's go ahead and take a look at Google right now. So we've got Google sitting at 320. Like I said, I had a covered call written for 305. And hey, it sold. So that's where I'm at. But if we look at this thing on this chart, right, I was, telling you guys back in probably April, I mean, I know back in the fall of 22, we were saying, hey, buy Google, man. It should not be this cheap. And it was. If we go back 5 years, we're looking in 22, it got down to 109. I think it was in the 90s. I think about that time point, I was saying, hey, I am loading the boat on Google. I don't know why it's so cheap. And a lot of people didn't want to get into it, right? It just was one of them ones kind of like Disney that seemed to have a lot of its own struggles in the way. They kind of got away from a lot of different things. And then, hey, we're starting to push into AI and things just went crazy. Warren Buffett bought 17.8 million shares for Berkshire B. And yeah, man, I mean, even in Q3 when he bought it, it was between 176 and 250, I want to say. So he's up between 25 and 85% in roughly a quarter. It just finally took off. And the fact that he bought 17 million shares probably helped that. But why did I feel comfortable, right? Well, I still really, really like Google. Don't get me wrong. Alphabet is a great company. They're doing a lot of great things, but man, this thing has just run so fast. You're looking at this average price target being 312. Yes, some new price targets came out. There might be slight amount of upside on that high end, but you have more downside risk. So when you're looking at this chart from April to now, I'm not all that upset with the fact of the gains that we got. But also, when I wrote that covered call, probably middle to beginning to middle of October, this thing was down near probably 230. I wrote a covered call for 305, not expecting it to get there. So the fact that it got there, I got the premium and I sold half my shares, right? So, half my shares in my one account. I do have shares in some of the other accounts, the Webull accounts or retirement accounts, I think. But a lot of my shares are held in my brokerage account. So I sold about $30,500 worth of Google. I know it's going to be a taxable event. I know that that's going to happen. I know that I've held these for, more than 12 months, so I shouldn't be too hateful on them. But yes, it's going to be taxable. But now where do I want to go with this money? A lot of the same places that I've probably already talked about. One, Meta. I'm definitely still looking at Meta like this thing is one of the ones that I need to be buying right here, right now. We're at 647. I definitely think we can get back up to 8. If it gets back up to 830. I don't see any real downside risk to buying Meta right here. I just don't. I can't really see this thing faulting anymore. The numbers were not bad. Some of the CapEx was a little bit shaky to where people got spooked out of this thing. Like when Zuckerberg said, hey, we're going to spend all this money on this metaverse idea. And, we're not so focused, or it didn't seem like we're so focused on Facebook and advertising, right? It seemed like the metaverse is where the company was going. We got away from that Facebook talk, that moneymaker, that cash cow. And we were talking about this new thing that no one knew what it was. A lot of people thought it was crazy. And then they backpedaled, right? So we're in that same kind of space right now, except they're looking to push more AI, more augmented reality, a couple things that have already been a little bit tested at this point. So should be a little bit more comfortable. The numbers still look really good. The advertising money is insane, and people are shying away from this thing. So it doesn't really make sense to me that we had this drop, right? We were up near 775. We came down below 600. This was 594, and this was end of October. This was the 20th of November. So yeah, we went below 600. We're sitting at 644. I'm okay with where we're at. We're at 648. I'm okay with where we're at. I think it's a good entry point. I'd like to up my shares. So that is one spot that I'm looking to go. Tesla is another one. Now, would I have liked Tesla sub 400? Yeah, I would have. Am I going to be patient enough to just simply, wait for 390 and wait for the perfect timing to buy Tesla? Possibly. Possibly. I would like to dollar cost average into this thing, buy a couple shares here, a couple shares in, a few weeks, and, add some more as the new year comes in. I'm not too sure how that's going to go, but I definitely am looking at Tesla. I'm definitely looking at Meta. I still want to add more Amazon. I might even add some of the Google shares back. I might just put on a purchase at a lower price, a strike price at say 305 and wait for it to come back down to that price point, because I think long term it's fine. Right now, I don't know that it's a screaming buy, but if I have that long term window and that long term horizon to say, hey, 3 to 5 years, I still think that Google is going to be a blockbuster. Do I think it's going to continue to grow? Yes, I think AI and the autonomous and everything else that they're pushing to build right now is going to continue to be money makers for Google. Again, Amazon, a lot of the same thing. I started talking about it. This is the second time that Amazon has actually outperformed Walmart. They are the largest company when it comes to revenue in a quarter, right? They just did $180.5 billion of revenue in the last quarter. Walmart did $179.5 billion. So $180.2 billion for Amazon. I don't know if I said that right. $179.5 billion for Walmart. So this is the second quarter ever to report more revenues than Walmart. So yeah, I still think that Amazon is going to be a powerhouse, right? And some of their revenue is going to be higher margin business. A lot of it is probably lower margin when it comes to buying, shoes or different items on their Amazon marketplace type platform. But I do believe in the AWS. I do believe in all things that they're doing with AI and all those spaces that they want to get into. I don't really think that the size of the business, Amazon versus Walmart, is exactly comparable, right? Walmart is doing different things. They are going to still be probably one of the largest retailers. Amazon is going to have more revenues from a lot of their other businesses and other streams of income. So I've said it before. I'm sure I'll say it again. Walmart is buying retail. Amazon is buying this conglomerate that does all the things. And I don't know how you really even compete with them on price. Walmart does a pretty good job competing with them on price. But if you're going Amazon versus trying to buy from another like local retailer for whatever that individual smaller item might be from your neighborhood store, Amazon's going to beat them on price. It's just how it works. So I don't know how these little businesses can even compete sometimes, other than the fact that people want to support people in their own communities. But I kind of digress, right? So that is definitely something that I'm looking at. Amazon, Meta. I'm really debating on Costco. Let's take a look at Costco. And I was also looking at Broadcom, AVGO, and I believe that their earnings are tomorrow. So we'll see if that goes down after earnings, but earnings are solid. I might be buying some of that as well. Costco, we're at 913. We got around 20% of upside here. This thing has come back from some highs as well. So back in February, we were looking at a high right around 1075 or 1075. Now we are sitting after this kind of sell-off, right? We had a lot of problems from like June on down, right? So can this number break above some of these other recent highs, right? These highs have just been declining. I think a good time to buy this thing, yeah, maybe you average in here, but once it starts to break above some of these previous highs, I think we start using this number like 922 as like a support number. So if this goes above 922, we get a close above 922, maybe this thing starts to reverse. There's been a lot of talk about a weak consumer. There's been a lot of fear with the government being shut down, and people didn't necessarily want to buy a Costco because we didn't know what the consumer is going to do. Is Costco going to continue to sell staples, the food and the household items that we have to have? Yeah, they're going to do that. But are they going to sell some of those higher margin items? I don't know what's necessarily higher margin items for them. Are they going to sell, the sheets or clothes or whatever else they sell that it might be higher margin? Maybe not if we have a weaker economy. Maybe not if people are losing their jobs or the government doesn't get themselves figured out and we don't know who's going where. But once we start getting a sense of what's going on here and we break to some of these new highs, I do think that we can get that move back up to around this 1075 number. I think that is foreseeable, right? I think we could get there. So buying Costco on weakness in the economy could be a turnaround story unless the whole economy continues to fall off and we have more bad news. But I think if we have more bad news, the least of our worries is having 3 shares of Costco. Your growth stocks are going to get beat up way more than Costco is going to get beat up if we really have a bad economy. If things really slow down and go sideways, I don't know that having Costco stock is the worst place to be. It's a little bit more defensive in what they have and their mix of goods, and they're still very well run. I mean, if I had to pick between them and a Cheesecake Factory, I would go Costco from the standpoint of that you're going to get a lot more security, right? You've got a lot of people that still have to eat. Maybe we, pull back on the fine dining or whatever, going out to dinner. Not that Cheesecake Factory might not be fine dining, but the fact there is that you're going to get more security from going to Costco rather than some of these like entertainment type things, whether it be, some of the Vegas casinos or whether it be, different travel. Costco would be a little bit better of a pick there, in my opinion, if things don't go so hot for the economy. So I did want to take a look at Broadcom. This one has been doing really well. So there's not a whole lot of current upside, but I've been reading a lot of things that Broadcom going into 2026 could be a very strong pick. So with that being said, yes, it's pretty flat right now. We're at 402, average price target being 401. Yes, the high on the street is 480. That represents about 20% of upside. Some of the lows are probably from a while ago. This thing has really run from April. I'm aware. It's been doing well with, all the Googles and NVIDIAs and AMDs of the world. They've been doing better. Broadcom's been doing better. It just kind of goes hand in hand, right? So some of these new price targets, all of these are in the 400s, right? Yeah, we got one from Bank of America at 400. But do we have any 300s in the past couple weeks? No, we don't. We've got a 480 from Jefferies. That is the street high. We got a 390 from DBS. But yeah, most of them from recent are in the 400s. And we go back next page over, October 14th, 360, 385, right? But we've already kind of trounced those. They still say that it's a buy. Some of the actual numbers here going forward, when I was looking at the Broadcom Refinitiv or Reuters report here, we got some different things, right? Still in a buy rating, 917% return over 5 years. Not too hateful. It's actually really good. And I got into this one way long time ago because it was a higher dividend payer than NVIDIA. I think they were paying like 3% at the time. NVIDIA was paying like nothing. AMD was nothing at the time. So I had got into this thing early. I wrote a covered call on this and I trimmed my position in this one. But I still have a good amount of Broadcom, right? So we still have a lot of growth, right? We've got 23% of revenue growth for 2025. But then by the end of 2026, we actually have an additional, call it 46% of revenue growth, right? So it's going to be accelerating its growth from 25 into 26. Yes, some of that's probably already been accounted for, but a lot of it hasn't. So I think until we get some of these numbers, we're really not going to know. Maybe they come out tomorrow and maybe they say like, hey, yeah, things are going to be as good as we thought. Maybe they won't. Maybe, whatever they're going to say. If we get some good news, but the market is just not really rewarding it, I think it would be a decent time to add to Broadcom for the fact of the revenues that they're going to be increasing going forward. And the earnings are going to be increasing pretty, handily with it, right? So it's not just a case of revenues just growing up or going up. It's also the fact that earnings in that bottom line is going to be going up substantially with it, right? So $6.67 is what we're looking for on earnings per share in 2025. And then we're going to be looking at a number of $9.36 by the end of 2026. So even on the low end, right? Even on the low end, we're going up about 60 cents. On the main, that's from the median or the mean to the low number for 2026. So this is still a solid 10% number of increases, right? Maybe not quite 10%, but at least 8. And then on that high end where we're going up from $6.67 to $9.36. Sorry, that's not even high end. That's middle. We're going up. I'd have to do the math. 20 something percent, 30%. So that is definitely where this thing is in that buy target. And I think that numbers could really do some solid movement for Broadcom. They pay a dividend. It's not currently much. Again, this thing has really rallied to the point where the dividend is really not notable. When I got it being 3%, it was really notable. So now my current dividend yield on my invested capital is probably more like 6 or 7%. But I also bought this thing 6, 7, 8 years ago at this point. So it is still growing the dividend though, right? So the fact that I bought it early, they're still paying me 13% more a year to hold on to the shares, while the share price has still just rapidly accelerated. And I don't really see it coming down. That's my point, right? The fact that this thing is still going to be in growth phase for 2026, those revenue numbers, the earnings per share, it is really going to be working at a high level. Now, we get down to the forward PE, it's at a 47.4, which is high for this company. You're looking at a company that has done a 22.5 PE for the last 5 years, right? It's a little scary, but then you realize the growth that they are putting in. The growth of Broadcom and where they're at in the cycle is going to be huge, right? So that is a lot of what we're looking at. We're looking forward. We're seeing a higher number when it comes to this forward PE. That oftentimes scares people. We see this red. It's higher than 100% of where it normally trades, right? So that is scary. But why, right? Again, those growth numbers are huge. The price earnings to pay, the PEG ratio, right, is actually cheaper than if we were buying this at a 22 with smaller earnings and smaller growth 5 years ago. So you're getting a better entry point when it comes to the actual growth that they are getting, because you're not paying 1.6 times. You're only paying 1.2 times the current growth. So I think that's where I'm at on this one. Is it makes sense to buy this thing down here on that PEG ratio rather than waiting for this thing to go up and maybe be at a 2.2, but the price is lower, or the forward PE ratio is lower, right? So this is the point where I think you can get into it. Yes, people are paying more on a PE basis, but you're paying a lower PEG basis, right? The ratio on the PEG is lower. So that generally means to me that the growth is there to really tell you that 1.2 is a good entry point for something like a Broadcom, and you're getting into AI. You're a chip maker, dividends increasing at a 13% year over year. There's a lot of things I like here. So that is another one that I'm watching. The next thing that I really want to take a look at would be Bitcoin, right? And Bitcoin, if I go ahead on here and I look at, let's take a look at IBIT. I always get them confused. Excuse me. IBIT, this is the one, right? This is the iShares Bitcoin Trust. BITO is the one that does with treasuries and things like that, that is paying you a hefty dividend to hold on to this thing. So again, Bitcoin, I could pull it up. Bitcoin was in the 80,000, maybe right around 90,000. I'll take a look off screen and I'll just see exactly where they are at. But yeah, Bitcoin, I think with the fact that it came down from like 126 and now we're, 30, 40 grand lower. We're sitting at 91, 385.58. I do believe that in the 80s, this thing was a good purchase, right? So I'm looking at the chart here. I'll go ahead and share it so I'm not just talking to you guys without the screen. We're going to pull this up. But yeah, down here, right? I was saying below 100, I was getting intrigued. I think I told you guys below 90, I really like it. 85 is a really good entry point compared to where it's been. I know people are going to tell me it's near the end of the cycle. I know people are going to say, well, when this thing falls, it falls 50%, and it hasn't done that yet. Maybe we got back down to 60 to 70,000. Maybe, right? Maybe it does, maybe it doesn't. So I'm still telling you, dollar cost averaging into something like a Bitcoin is a great way to build a basis, build a position. Buying it at the peak, yeah, sure, you can still dollar cost average if it's at the peak. You might not know if it is at a peak, right? It might keep going, right? It could have, gone from 120 to 160. We never really know with these things. So dollar cost averaging is great to take some of the highs and lows. Now, I will say that it goes below 20% below that high price. So if it dropped from 120, call it, and it drops 12,000, drops 24,000 down below 96, that's when I want to start doubling my investment. So if I was adding $100 a week into Bitcoin, below that 20% of that all-time high at, say, 96,000, that is where I want to double, and I want to be personally purchasing, $200, right? I want to take my investment that I was currently dollar cost averaging and double it. And until it goes back above 96,000, I'm going to double it at whatever, price I was looking to purchase it. So if I was adding $100 a month, I double it. I go to, $200 a month. And then if it gets back above that 96,000 or within 20% of that all-time high, then I go back down to my $100 purchase to dollar cost average. That's my 2 cents. You can do it. You can not buy Bitcoin. You can stay away from all of it altogether. But that is something that I would do, is look to purchase when it is fallen 20% from the peak level of whatever, whether it's NVIDIA, whether it's AMD, Costco, Bitcoin, whatever, right? That is something that I think makes a better investment strategy long-term on something that you have long-term belief in, right? Maybe not your small caps, maybe not something you're just trying to swing trade, but when it becomes something that you have a lot of faith in, you've done a lot of research on, I think that is a good way to play the market. So I did want to cover the Fed Watch tool. This is the CME group. We have been talking and listening to Trump kind of bash Powell. And, with some of the reports on earnings, unemployment coming out after the next meeting is in what, 9 days, 10 days? 9 days, 22 hours. We are looking at most economists saying that we are going to get another 25 basis point cut before the end of the year. So we will see what happens there, right? I think unemployment was increasing slightly. Job growth was increasing, which never makes sense to me that they're both increasing. How can we have more jobs, but unemployment is also going up unless someone is taking on more and more jobs? So say they don't just have one job, they're taking on a second or a third job. I think that could be a possibility. But wages were, I think, fairly steady. But some of the numbers were pointing to the fact that the Fed was going to be pushed into cutting rates before the end of the year. So that is definitely something that we're watching for the market. We are also, presumably thinking that the S&P and the NASDAQ finished out November strong because of the fact that rates were potentially going to get cut again. So if I'm looking at the S&P, we will go ahead and pull this one up. Yeah, we started the month 68.40, and we finished the month, you can see it right here, 68.49. So we just narrowly sneaked out the smallest gain on the S&P. But yeah, we did it, right? So it's, I guess, done at this point. And we started October. I think the end of the close was 68.40. So then what did we do on the NASDAQ? Because the NASDAQ had a couple kind of blockbuster days there to finish out the month, right? From the 20th, we really had this rally back up, but we did close the month on the NASDAQ lower. We were at 23.7 to start the month, and we're at 23.3 to end the month. So the S&P came out of the month with a gain. NASDAQ was down. The Dow, let's take a look. The Dow had some brutal days in November. We were 47.5 to begin the month, and we ended at 47.7. But yeah, I mean, some of these days were just absolutely brutal. Up until about the 20th, we flipped the switch, and we were kind of back off to the races. Again, what's the end of the year going to hold? It's going to be a lot of hedge fund managers selling. It's going to be a lot of people, taking some of the gains before the end of the year. It's going to be a lot of tax loss harvesting. It's going to be a rocky roller coaster. Are we going to get a Santa rally? I don't know. Maybe we do. Maybe we don't. But then, come the beginning of the year, I think after all that tax loss harvesting and taking some of the profits off the table, people are going to reinvest. That's normally what we think, right? So we'll see what happens when it comes to January. I need to get a little bit better of a feel as to what's going on and where to invest from here. But December could be a little tricky. Maybe we start to, December with this rally. Maybe this rally here continues. And then maybe by the 15th, hey, we're selling back off, right? I'm not too sure, but I'm going to stay the course. I'm probably going to write some more covered calls. I'm going to be buying some of the things I was telling you that I'm buying here: Meta, Tesla, Amazon, probably some Bitcoin, maybe some more Alphabet. When it comes to the investing challenge, I did not buy last week. I was in the middle of some canyons in Sedona when I was probably set to buy, even though we were a couple hours back, being on the West Coast. It was actually 2:00. I remember rushing to Subway Cave for a kind of crazy hike, and that would have been about 4:00 here. Yeah, 4:00 here. So yeah, my timing was all off, and stocks were not on my mind. So I did not buy anything. Where do I want to be putting something to work right now? What's NVIDIA look like? We're sitting at 177. We got about 45% of upside on NVIDIA. I like that, man. I do like NVIDIA. Lily has been insane. This has just been a blockbuster of a gainer for us, man. This was 650 like 3 months ago. This was potentially one of my best calls. I don't want to pat myself on the back too hard, but August 10th, man, I said below 650. This thing is a steal. If you're not buying it, you should have been. And it has done nothing but go up since then, man. So this thing has been just out of this world, phenomenal gains for us. I'm not buying this right now, but man, I'm happy to own it. I am so happy to own this thing. I could probably even sell a little bit more as it hit 1100 probably on Thursday. Man, maybe we just go ahead and start buying some more NVIDIA. 45% of upside on that player. Yes, Google and Amazon and Meta were trying to say that they're going to come out and make their own thing. Jensen Huang's basically saying they're whatever they do, even if they do it, they're one generation at least behind us. So I still think that NVIDIA is running away with the lead. Could they catch up? Certainly. But the fact that we can get NVIDIA at more than that 20% discount that I was talking about, this is something that I tend to get excited about. We were looking at on the 30th of October. Where were we? You can't see on this screen. Let's see what the price high was here when we go over to the snapshot and see just where NVIDIA was. They were at 212. So $20, 90, 192. We might not quite be 20% yet, but I still think it is a stock that sold off when it really shouldn't have. I'm comfortable buying $200 worth of NVIDIA. We'll get another share and a little piece into the Webull Investing Challenge portfolio. I'll be doing that. I got to find a way to spend this 30 grand that was, sold out of these Google covered calls. And I told you guys what I'm doing there. Lily, that one is still rolling, but I can't tell you to buy it. I really can't. Broadcom, Meta, Tesla, Amazon, Bitcoin. We're going to be buying NVIDIA for the investing challenge. I'm just writing some notes here because I will forget, even though I just said it. I will forget by tomorrow if I don't write it down. So thank you guys very much for stopping by. Hopefully you guys had a good Thanksgiving. Hopefully this brought a little bit of knowledge to you. If it did, I would definitely appreciate a share, subscribe, hit the thumbs up button, hit the notifications so you don't miss another video. I definitely appreciate you checking it out. And hopefully you guys have a safe and happy travels if you're still traveling home. And hopefully December and the rest of the year treats us pretty well also. So thank you. And I'll catch you guys in the next one. Take care.